The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 31st. Couldn't remember if it was the 31st or not, but it is still January 31st, and this is the terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one, and of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. And I want you to know that I'm absolutely grateful for your presence here. But more importantly, I'm here to serve you. So feel free to pick up that phone. Dial on in, 877-927-6648. Of course, internationally, 727-445-1044. You can send me an email, steve@tfnn.com. And inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 145 points at 19,825. S&P is off 9, trading at 2271. NDX 100 down 35 points, trading at 5094. NASDAQ Composite off 29 points. The Russell is flat. Semiconductors are down 16%. That's 1 7/10% to the downside. Gold is up 16 buckaroonies, 1 3/10% to the upside. Silver's up a little over 2%. That's 36 cents, trading out at 17.51. Light sweet crude is up 76 pennies, trading out at 53.38. Leading the charge here to the upside, you've got Regeneron Pharmaceuticals up 9.5 bucks, nearly 3%. Thermo Fisher Scientific up 5% or $7. Market Taxes Holdings, something like that, is up $7. Simon Property Group is up $6. Tesoro is up 5. Excuse me. To the downside, you've got Priceline leading the charge dollar-wise. Of course, that's only 1 7/10% to the downside, but $29 still is what it is off. Meta Financial Group down $11 or 11%. Psychomedics is Psycho today, down 10%, 40% to the downside. Amazon is down about 10 buckaroonies out there. So, excuse me, sorry about that. Under Armour is down $7. Okay, so let's go take a look at what the markets are doing. Let's look at it on different time frames out here. And, you know, if I just switch over and take a look at this chart, what we can see is we have both the Dow and the S&P 500 in essence making lower lows out there. So let's look at both the Dow and the SPY and just try to understand, hey, where are we at volume-wise at about 1 o'clock in the afternoon? So give me a moment here. I'll go over to my little straight line chart. So the Dow's got, let's start off with the Dow. Here's one of the things we're going to notice inside the Dow Diamonds. Take a look at the ETF structure. So we have a brand new market profile that formed yesterday. Those are the blue lines going on my horizontally on my chart out here. Now, we're inside the current box, and we know that this has a bias where in this price area, which is between 198.83 and 197.12, it is the sellers who have control of this auction area. The reason why we say that is because the point of control, the center of that box, 198.40, closer to the top of the box. So this would suggest to us, just by looking at only the market profiles, nothing else, that price should get down to test the 197.12 level. Now, what the Dow Diamonds are doing, they are testing the most recent swing point low from back on January 19th. That had 3 million shares. We've already done 2.4 million shares, so we already know we don't have to do much straight line math to understand that you're coming into that swing point with volume. Even if price tests and rejects the high of that, which is 198.16, that being January 19th, because you're moving into it with volume would suggest that you would at least get down and test that. If you close inside 198.16, what the diamonds ought to do is go test the bottom of that swing point, 196.69. Now, if you take it out with volume, then it says we go lower. Where is lower? You start coming back into the breakout area, really, of December the 7th, anywhere from 192.42 to 195.69. So that's the message of the Dow diamonds. Let's go take a look at the SPY out here, see what it is doing. Today, right now, trading out at 226.64. Volume thus far is 34 million shares. Now, 34 million shares is going to equate to 63 million shares, which is peanuts. It is less volume than yesterday, which did 79 million shares. So we have a bit of a divergence with regard to its message. Nowhere near the, what was the swing point inside the diamonds? What was that date? That was the January 19th, just out of curiosity. Let me see where January 19th is in the SPY. I don't think that's the swing point. Yeah, it's not. But where is January 19th? There it is. Really, the swing, junior senator out here, you'd have to really say it's more likely January 12th, maybe January 23rd, but those had volumes of 72 million, 75, and as I say, we're coming into a 63 million shares, so light volume. Nonetheless, that being said, it's not exactly like the markets are falling apart. It's really just consolidation, sideways-ish type moves out here. Even though there is that island top, that scary-looking island top that was formed out here, there is just no real selling, or selling is being meant as being bought up. Is the way that I would take a look at it. Doesn't mean that the SPY won't pull back to 225.71. That's the bottom of its daily profile out there as well. In fact, pretty good chance that it would. Let's go ahead and stay with this theme out here. Let's just go take a look at the IWM as an example, which is trading flat today. Or just slightly lower as we speak right now. Volume on it. Now, this has come back to actually test support. So if you're wondering, hey, why is the IWM, why is Russell 2000, and we can look at this in the futures contract as well, why is it not moving really lower, whereas the other ETF structures or indices are? It's because it's really come back to its profile level of its 133.51. The actual intra-session low thus far is 133.48. Pretty good. And the volume on this is 14 million shares right now. That equates to about 25 million out here. Last time down, yesterday we were down with 40 million. So, yeah, volume is certainly dissipating here inside the Russell 2000. Now, look, you close below, arguably 133.51. It opens up the potential of the floodgates to get down to the 126.85. But right now, it's up against support. If we take a look at the futures contracts here, you're going to see the lower right-hand panel. You'll see that it's also right up against support. So it's key level here for the Russell. It's not tipping its hat as to what it wants to do next out there. That's what's going on the daily charts. When we get back from this first breakout here, we're going to go take a look at what's going on the intraday chart, such as this seventh wave move to the downside, letter G, price moving lower inside the NQ. You'll notice that price moving higher with less relative energy. Mark the top. Will this mark the bottom? Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 161 right now. S&P is down 11. And we are going to take a look at the 30-minute chart here for the NQ. Now, as Don Adams used to say, I think he used to say, right? Well, he did what there were kind of like two phrases that he had, if I recall correctly, right? One was with regard to what I was going to refer to here is he would say the old trick, right? In this case here, we're looking at where the market stretches itself. And when it gets those stretch marks, there's where Stevie starts drawing those black diagonal-ish type lines. So we'll call that the old rubber band trick. And then I think he always used to say something like, would you believe, right? Something like that. Would you believe? I know we've got dinners in there that know even better than I do. But in this case here, we're going to look at the old rubber band trick out here, where price in this case here moves lower, does it with less relative energy, and then Boeing's off of that. Now, that would then say you could potentially have a turnaround Tuesday. What needs to occur in order for that to happen? Well, first off, you've got really two bottoming patterns out here on a 30-minute basis, one being that seventh wave move to the downside. We posted this inside the Tigers Den as we came into this pattern completing at the noon hour. And in this case here, we also have price moving lower with less relative energy. There's also an A to B equals CD to the downside. So you've really got three patterns here that have completed on a 30-minute basis. Now, in order for this pattern to confirm, you need some type of bullish reversal signal. Well, we got that. We received a key reversal session. We received a bullish engulfing. So that says the low thus far is very important. If this is going to be the old rubber band trick, those lows will not get violated today, or should not get violated. But here's what needs to happen. You really take a look at the bottom portion of my chart out here. That's the price oscillator. What price did as that pattern was forming was it bounced right up to where it needed to go, which was resistance. That was what? Stevie's red line. A very important red line. Because that is where you could see that price oscillator, the very bottom panel of my screen, actually turn up. Turning up, that would mean price getting over the 50.94 level would be the first indication that you would have more move to the upside. Now, that more move to the upside specifically would take in that 51.10 area. If it could clear then 51.10, then you would have turnaround Tuesday. If, on the other hand, the bottom gets taken out, the low from an hour ago gets taken out, then the old rubber band trick did not work for Don Adams here. Did not work for Get Smart. So which is it going to be? I don't know. What we know is that the first element of this pattern occurred. Now we're seeing price back off. Let's go take a look at a 10-minute chart out here for the NQ, for the ES as well. See if we can get any kind of read on that. Again, now we're just doing some intraday surfing out here. So as we take a look at this, here's the 10-minute chart. Well, there we go. That's going to be a little bit easier to take a look at. And so we'll look at a couple of different things out here. So when we made the low, when it made its low, the NQ 10-minute chart, I'm going back to now 12 noon, there were 3,380 contracts that traded. As price came back, there were only 1944 during that last 10-minute session here. That was at 120. So price is coming into that area with some light volume. This would suggest, and also what's really interesting about taking a look at this 10-minute chart out here. So not only, I didn't realize that until we started looking at it here, but not only are there, in essence, three bottoming patterns inside of the NQ on a 30-minute basis. And we said that, hey, that low that came in on that 30-minute chart was really important out here. We see just how important. Now, in this case here, it doesn't get to the bottom tick, but this 10-minute profile that formed, you have both the center of the box and the bottom of the box at 50.8477 to be exact. What this tells me is that the NQ is going to go at least target 50.9850. It hasn't gotten up there, but it's going to go ahead and at least do that because that is a very strong level of support. If you're short, that doesn't mean you get out. I just want you to be able to anticipate what these tools here are communicating to you and I. So expect it to get up to that 50.98. Now, that gets us back here because that'll be really interesting because it's at about the 50.94 level where Stevie's red line is. And so if you get above that and then you really close above the, on a 10-minute basis, that market profile out here, this is the 50.9850 profile, then that says to me, okay, there's more bounce to come. That more bounce being 51.10. Now, it is the NQ that is giving us the best signal. Not that there was a bad signal in the Dow. If we take a look at it on a 30-minute basis, it too only for now this formed two patterns out here. This formed an A to B equals C to E to the downside, had that seventh wave going, but as there was a little bit push lower into the noon time frame, it lost that. So we're just going to go ahead and turn that tool off out there. We did get that bullish reversal signal, not as strong as of a bullish reversal signal as the NQ, but a bullish reversal signal nonetheless. Now the key here inside the Dow, in order for it to get now at this stage here, both the Dow, both the NQ, they're still absolutely in the hands of the sellers. They have to clear on a 30-minute basis. They absolutely have to clear and close above Stevie's red line to give it any chance. In the case of the Dow equity futures contract out here, you're looking at a price point in 19,768. You're at 19,749. So in order for it to get any type of real bounce mechanism going out here, it needs to close above that level. Then you're looking at a price move to the 19,793, 19,821 area. Otherwise, we've just seen a little bit of a relief rally, but I would be very surprised if we don't see that 50.98 level get tested inside of the NQ. If I go to a little bit larger time frame charts out here, we haven't taken a look at the ES Mini, right? So let's go take a look at it. It has been moving lower with less relative energy, but we're in that 2-hour time frame right now where potentially, now this doesn't complete until 2 o'clock until we're off the air here, but as we speak right now, there is a bullish reversal signal that is forming. This is only after 5 waves to the downside, but you can see the importance of these patterns. When the ES Mini actually formed its high on a 2-hour basis, it made the exact opposite pattern. You got that little bearish reversal signal that took place, and then price careened down to the lows that we've seen thus far today. So you'll want to watch where if price closes at the 2265 level, 2266 level, to 2267, you've got a bullish reversal signal. But the real key is whether or not it can close above 2269. So intraday, we are seeing a market that is trying. We are seeing a market where bulls are trying to get some legs out here, and you now have the areas that they have to clear in order for them to be able to provide you with the message that yes, in fact, that is what's going on. Okay, so I don't see any emails or pings inside the den, but I would love some of those, because then you could kind of direct me as to where it is that you want to look. I imagine that some of those areas might be gold and silver and so forth. Why don't we, instead of, I'm sure the other host, we're taking a look at those as well. Why don't we go take a look at some of the actual metals themselves, not metals, some of the mining stocks. Let's start by taking a look at the GDX out here. Now, in the case of the GDX, right now today it's trading out at 23.77. Volume behind the move so far, 36 million shares going into 78 million shares. So still a little bit light as it tackles its swing point. But nonetheless, this is bullish. This is super bullish. This is like Super Dave. Was it Super Dave Osborne? Another great character in life. Maybe not as good as Don Adams, but the GDX making its way up to the 25.35 area. Steve Rhodes with TFNN. Great.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So one of the questions that came in by email from Sarah is basically, I'll summarize this. Says Steve, in essence, with the island top that you called inside the New York Stock Exchange, or that it formed, not necessarily that I called, but that is present inside the New York Stock Exchange, why aren't you calling this a major top inside the market? And Sarah, that is really, it's an excellent question. We pointed out yesterday how we don't want to ignore the island top pattern inside the New York Stock Exchange. It would be foolish to do so, so I'm not going to ignore it. And inside the New York Stock Exchange in 2016, we probably have more island tops and indices than we've seen in almost. It's unprecedented, really, the types of island tops and bottoms that we have seen. Some have worked, some have failed. The island bottom that has worked inside the NYSE was June 27th and June 28th out there. That, in essence, has marked the bottom thus far. We then did get an island top. This was formed over a period of 4 days, really, so that means 6 trading sessions, but between September 2nd and September 8th, gave us basically a 0.618 retracement. It was a little bit more than that, 63% retracement down into November 4th, and then the NYSE went on and made an A to B equals CD pattern out here. So now we have its next island top. Now, if anything, Sarah, that is going on, I believe it's similar to the island top that formed out here between September 1st and September 8th. And that we very well may have, in fact, there's no reason for me to not believe it, we have some type of retracement going on. And that could be nothing more than the 0.618 retracement. Well, that's an expansion. Let's actually put a retracement tool out here. A retracement of this, in essence, this C to D leg out here. That could take it down about the 10,685 level. But I do not believe, and this gets back to your question, that is a major top that is formed inside the markets. Not at all. Not even close do I believe that. With regard to the NYSE, the reason is it's called gobs of liquidity. I ought to write a book called Gobs of Liquidity out there, because I don't think anybody else has used that. But it is because the market has gobs of liquidity. If we take a look at how this island top was formed, and we go back to the trading day of January 25th, when price had gapped up there, that was probably the 20,000 Dow day out here. And you're just looking at the advanced decline line on the bottom panel of my chart. You'll see some crazy number out here because it's just the summation line of all advanced declines, and this has got a lot of historical data. But what you will see just by looking at the line is it also made a new all-time high. That is not how the New York Stock Exchange forms its major tops. It's just not. If we go back, and we can go back, let me see, I got to use the scrunching method out here, and we go back to, as an example, different time periods where there are significant tops inside the market. And so here's one of them in 2007. Now, I'm not showing you the advanced decline summation of the volume. I have that on a different chart. Then I actually look for it. I don't see it handy right here, right now. That's a manual calculation that I do almost each day. And that also made a new all-time high on that same date, at its all-time high that thus far we have seen inside the New York Stock Exchange. That is not how the indice makes its major tops. Instead, what it does, and this is my scenario or thesis, if there is a major top to form, it will not come for another 3 months or so, because there is typically that type of a lag time. As an example, inside of the NYSE, it had back in June of 2007, it was June 4th of 2007, was when it actually made its highest high. And then I should really take this green line and I should take it all the way back to that level, because that would be more appropriate. I kind of screwed up there, but that's not the first time today. So that is where it made its highest high. Then the New York Stock Exchange went on to make really 2 more higher highs out here. One was in July 2007, which, by the way, did lead to a pretty nice sell-off. I remember being short and then switching to long on August 16, 2007, because I can remember where I was sitting, which was in Las Vegas. And then the market, the New York Stock Exchange, went on to form a higher high in October 11, 2007. But you can see on the bottom portion of my chart out here how it was making a declining top line. We go back to 2000. We go back to other times in the market where the New York Stock Exchange makes those types of patterns. And so with conviction, I believe that this is not any different, if different at all than the little top that was formed out here in September. So it doesn't mean there's not more to come to the downside. Could be. I'm not completely buying it just yet. Really not, because of the underlying cycle, not psycho, but cycle, that suggests we still have more movement to the upside out here before maybe we see, more of a decline. So that's my thoughts. That's my thoughts with regard to the markets and whether or not there's some type of major top that has formed out here. And it's just that the patterns that are typically associated inside the New York Stock Exchange, both volume-wise and so forth, suggest to me that there's just really gobs of liquidity out here. And the market has basically done diddly, right? If we go take a look at the VIX index as an indication out here, this is kind of the tight trading range that we're in. We're taking a look at this Bollinger Band down here at the bottom. And today it actually kind of hit the top of the Bollinger Band, 1306. The actual high that we hit today was 13. And, it's traded above the 50-day exponential moving average, but really not much in the way of damage out here. So, this is really giving me another signal of, you've got it, gobs of liquidity inside this market. And maybe it's not U.S. dollars that are chasing the market. Maybe it's international dollars that are changing the market. I don't know what it is. I just know that what it is that this is not how major tops are formed inside of the New York Stock Exchange. And we just really haven't moved that much to the downside. We already looked at volume. So the volume characteristics inside the SPY are basically close to pathetic with regard to sellers wanting to beat their chests out here. So that's my read on the market, even with the Dow being down 153 points out here. Okay, I'll look for other questions in about 2 minutes, see if anything came up out there. Let's take a look at, we were going to look at some gold equities out here. So let's take a look at Barrick Gold, 15 million shares as we speak today. This is on its way up to 1984. That will be, do we have a confirmed A to B equals CD? 26 million shares taken out with 19, taken out with 28. We do. So in the case of Barrick Gold, that has a confirmed A to B equals CD to the upside, 1-to-1, takes it to 1984. It's going to deal with the swing point high congestion zone 1895 to 1788. We're already inside that right now. That has volume of 25 million shares. So you're going to go test at least the 1895. That'll put a little juice inside of the GDX. But Barrick Gold wants to do more than get to 1984. 2084. In fact, what we have likely seen out here with regard to the mining equities is a major bottom. I'm much more comfortable calling what we are seeing inside the mining equities a major bottom versus trying to say that the markets and indices have formed a major top. These indices have got much further room to go to the upside out here, and we ought to see that unfold this year. So all looks good all looks golden in the maybe that is why Trumpmeister has got gold curtains, because he knows that the mining equities have formed a major bottom. I don't believe that, but Steve Rhodes with TFNN. Dow's off 149. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We're going to go out to Erie, Pennsylvania, speak with Marie. Marie, thanks for calling. Thanks for holding. How are you doing this afternoon?
Oh, doing terrific.
Excellent, excellent. You are taking a look at Microsoft, I believe, right?
Yep.
Okay. And tell our audience what it is you're looking at and how I can help you.
Well, I'm currently in Microsoft, and I have a very nice gain. But I had wanted to add to my position, and I was wondering how much of a pullback to expect.
Okay. And you're this is a long-term holding for you?
Yes.
Okay. So therefore what we'll want to do is take a look at this on at least 3 different time frames, if that's okay with you.
Yes. That'd be
okay. So let's start with the monthly. Let's go from the larger term time frame to give ourselves a feel as to what Microsoft is doing. Now, let me just make sure one thing is turned on this longer term chart here. Is it? Yeah, it is turned on. Okay, so this is nice. So one of the positives as we take a look at this monthly chart for Microsoft is that in the current month, the month of January, this thing has moved higher with the needed relative strength. Prior to that, we can see some black lines on my chart that were going higher, which was indicating to us that it didn't have the same momentum move behind the price move out here, but that has been eliminated as we speak right now. So unless all holy hell breaks loose by the end of the day, which I don't see that happening, this looks good from a long-term standpoint. Ideally, long-term, this would say the place to add would be around the $61 level. 60.72 is the exact number right now, but this will change. So we'll just call it about $61. That is what I refer to as my oscillator on change line out there. And that would be a nice buy area on a pullback. Now, at 60.72, you're at 64.31. That might be what you might not want to hear that, but on a long-term basis and trying to add to a long-term holding, that would be something I would look at. This says that Microsoft should continue higher. That's what the monthly chart communicates to you and I. The weekly chart, let's go see what it is communicating to us. The weekly chart also shows that it's been moving higher, doing with less relative energy. The weekly says the place to add or consider adding is around 63.88. So that's not that much higher than where we're trading right now at 64.35. So maybe you could take those two different price areas if you've written them down, and maybe consider adding to your position, especially since you said you have a nice profit in it. Okay, and that is just looking at my again, that red line, and that is on the weekly basis out here. And we're going to come up with a set of different numbers, but hopefully, Marie, what that does is that gives you some ideas as to what to be looking at, okay?
That sounds good.
Okay, so on the daily chart here, when we come off of this low right here from November the 15th, and we start doing some wave counts higher, this says that a couple of days ago, Microsoft made that 7th wave move, which can be a place where we see some type of significant tops. We see that same pattern inside the S&P 500, so no surprise to you or I that we're going to also see this inside of Microsoft. Now, price right now is testing my red line, which is right around the 64, looks like 64.30 range. We're trading at 64.35 right now. So it's going to be interesting to see if, in fact, this level holds. I don't think you do anything right now today. You wait to see if this level holds out here, because if we see a pullback below this area, it gets below Stevie's red line, then that says you have further to go to the downside, which really opens up the door to those other levels that I gave to you. Now we're going to switch over to the daily chart out here that shows us where our market profiles. And the next level of key support on this is 64.10. And the reason why I give you these numbers, you can write these down, on a pad of paper and try to make a judgment call, because I don't think we're going to find the exact bottom tick out here as much as I'd like to for you. But instead, what I need to do is instead give you a range. Now, in the case of Microsoft, that's a significant support level, which would say if price closed underneath that as well, 64.10, you should anticipate that your buy on Microsoft would be 62.72. Okay, and that is the brand new daily profile that formed today. Now here's the deal: I don't even know if price will get back to that level, because this profile that formed today is brand new, and this formed below price, and that is a very bullish signal to us, which really is emulating the mere fact that a couple of days ago on January 27th, Microsoft moved higher with 44 million shares. Today, you're pulling back into that breakout area with only 13 million shares, which I think equates to maybe like about 20 million shares or so for the day. So Microsoft is really pulling back with light volume. Yeah. Do you know when Microsoft comes out with earnings, Marie?
Gosh, I thought they already had.
Okay, maybe they did. Maybe they did.
I thought that's why they bounced up.
Okay. So that was it. So if that was a couple of days ago when they came out with earnings, all the price is doing is pulling back with some light volume out here.
Right.
Since you're talking long term, I'm gonna still say wait for a couple of days, see what happens. See how this behaves. I would also say that if you take out the high from 2 days ago, then just simply add to your position and play it on a momentum move on a breakout. So look in that 62.70, that 60.73 or so, and about 63.88. Those would really be the levels that I would be looking at for adding to inside of Microsoft. The only thing that would have us take those levels off the table is if Microsoft broke down with some big volume. If it started moving lower with accelerated volume, then you and I would circle back and say, okay, there must be a different level for us to look at.
Yeah. Well, I was looking at between 62 and 63, but because it was moving on such light volume today, I was thinking, gosh, will it have enough oomph to go down that low? I don't know.
Yeah, well, the thing is that, so this is where, in the beginning of the show, we started taking a look at what the indices are doing. And the ES Mini, so I'll switch over here, in the S&P 500, suggests that price still should really pull back, and where it should pull back to. Now, the problem here is it can do this overnight, and then bounce off of that. But if that's the case, and you have a nice piece of information that its next bottom is in, and that is that price ought to get back to about 22.56, and right now it's trading at 22.64. It almost seems like we're splitting hairs, but I want to see if, in fact, that level will hold. And I think it's just, On a 30-minute basis, there are some indications that it's trying to form a bottom. But we really want proof because price needs to clear above these other levels that we had suggested. Like inside the NQ, we were suggesting a move up to, on a 10-minute chart, about 50.98. It got up to 50. Didn't get up to 50.98. It got up to 50.96.75, which is pretty darn close out here. I just don't see. The bulls have had opportunities to turn this around today, and they just have not been able to do that just based on the patterns that we have. And so this would tell me that we still have a little bit more movement to the downside. So I'd rather you kind of wait to see how, if in fact it plays out like that, what does Microsoft actually do? But it's doing the right thing, which is pulling back with light volume.
Right. Okay, that sounds reasonable.
Okay.
So I wasn't too far off in where I was thinking.
No, hey, look, if this can get back to that 62 to 63 area, as long as it's light volume, you've got the right spot.
Okay, thanks so much.
You bet. That was Marie in Erie, Pennsylvania. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off about 175, S&P down 12. Let's go take a look at, usually this last 4 minutes here, let's go look at some individual equities. Let's take a couple that are moving higher, a couple moving lower. Let's go with the Regeneron Pharmaceuticals, up 3%, nearly $11 today. Let's check out the volume behind that move out here. Volume today is 636,000 shares. Now, when we take a look at this equity, this had completed an A to B equals CD pattern back in November 4th. It was really testing a series of swing points. So let's go take a look at those swing points. These were down here from right around the price level of about $329. First time down June 27th was with 1.4 million shares, and then there was about 1.8 million shares. So prices come back into that level. But that 1.8 million share day is being tested today, tested and rejected, by the way, with light volume, 636,000 shares. That's how you like to see a bottom test form out here. Now, what this would say to you and I is that Regeneron Pharmaceuticals is in a consolidation pattern. The bottom of the consolidation is in the $330 area. The top of the consolidation is $443. Now, I don't have any profiles on here. Don't really need them at this stage, although it's a brand new daily that formed, and you're right up towards the top of that or just slightly above it. So it looks like Regeneron Pharmaceuticals, I don't know which number Regeneron is weighting-wise inside of the IBB, but I believe it's in the top 5 out here. So I guess that would say, well, what's the IBB doing out here? If Regeneron is in a consolidation and it's giving you a reversal, what is the IBB doing? Well, in the case of the IBB, really we come to the sign of strength out here. That sign of strength that I'm referring to is back on the trading session of, in essence, November 9th, but really the high from before that, 265. There was 11 million shares up there. You came down a few days ago with 1.2 million shares. That's previously you were 1.2 million shares, and before that 2.6. So we've got Regeneron 6%. Thank you, David, Mr. Polar Bear. So you've got the IBB in essence in its own version of a consolidation. Now it's a much different pattern than Regeneron was. Here you've got a series of declining tops in essence. So you've got the little wedgie pattern. So this would say to me that the IBB is headed for about 282 is the price level. If we turn on the blinkers out here, our market profiles, 281.73 is the bottom of its daily weekly profile out here. So that seems reasonable with regard to where it is headed to. Now, if it takes out that descending trend line, the IBB would be a sector most certainly you'd want to be taking a look at as potentially finding a bottom out here. Well, with a minute and a half to go, let's look at I don't know, Meta Financial, cash. What? Oh, no, sheesh. What the heck did this thing do? You know, I was going to say in honor of Norm Cash, but Norm Cash would not make this kind of error. And what I refer to here is whatever they've done, it doesn't look good. Of course, this is not the largest of volume stocks, although today it is 278,000 shares to the downside. And the question is, where is this thing headed to? Good Lord, I don't know. You'd have to say the highest, where this thing could be headed to, and that's danger. Will Robinson. It's all the way back to April 27, 2016 in the $46 area. That would be another haircut of about 50%. Don't short it. I'm not saying that's where this is going to go. You'd have to do some more work on it. But ticker symbol CASH is losing a lot of cash for a lot of shareholders as we speak today. So, folks, great to be with you on terrific Tuesday. Stay tuned. Our favorite polar bear, David White, he's up next. And because it's Tuesday, we've got the Tom O'Brien Show from 3 to 5. Andy Heck to take it on home from 5 to 6. Have a terrific day. We'll see you on Wonderful Wednesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.